Hello and welcome back to Vision Economics Academy. Today we'll be covering the chapter number 6, banking, commercial bank and central bank from the macroeconomics. Uh, uh, we have divided the chapters into various segments, of course, because it will be a very long video. Today we'll be covering commercial bank, right? And one request I have to make to my viewers is that 80% of my viewers, about 80% of my viewers have not subscribed the channel. So it would be great if you'd spare your 5 seconds and subscribe to my channel. So let's continue. So what is a commercial bank? Commercial bank is an institution which accepts the deposits and give out loans and various investments. Now, it mobilizes the fund, basically, whatever the ideal money that is remaining with the people, it's used by the bank efficiently with the aim of earning profit, of course, right? So these are what commercial banks is. This is what commercial bank is. Now, the functions of commercial bank, mainly there are primary function and secondary function. Under primary function, we have accepting deposits. Okay, under primary functions we have accepting deposits and granting loans or credit. So these are the two primary functions. Primary functions means the basic function, right? The most important. Now, deposits are accepted by banks in various forms. It can be one in um, as in the form of current deposits, which is mostly done by the businessmen, right? And it has no limitations or restrictions on the amount of time they can withdraw. It's repayable by bank on demand. It's also called demand deposits, right? Then the next one is fixed deposit or term deposit, or there are various names to it, time deposit also. So um, here the amount is deposited and to the bank for a fixed amount. So only after the maturity the depositors can, mostly withdraw it, and there is no check facilities here, right? So they cannot um, withdraw it at any time, but of course interest rate is very high. Okay, because the amount stays with the bank for a long time, so they pay high interest rate to the depositors. And then the final one is the saving deposits, which is a mixture of both. So it has check facilities, right? And do remember, in current deposits the bank do not pay any interest rate for them, rather they charge for the services. In saving deposits, yes, of course, check facility is there, but there are some restriction in the amount of time that they can withdraw it. They charge it, to discourage the withdrawal, right? And yes, of course, they are, of course, paid some interest rate, but it is not as high as the fixed rate, fixed deposits. Okay, so interest rate is paid, but it's less, right? Now, another functions, primary function is advancing of the loan. Now, the amount that is deposited does not remain idle, so they do keep some amount as reserves, which we will be, as we progress in the chapter, we'll be doing this. We'll be covering the credit creation by the commercial bank. There you will be knowing more about what cash reserves are. But however, right now, if 1,000 rupees is deposited, if 20% are to be kept as reserves, that is 200 is kept as reserves and rest 800 is given out as loan. So the bank keeps a certain amount as reserves and gives others as loan. So these are the two basic functions. And secondary functions, overdraft facility is like you have rupees 500 with you right now, but your bill is of 1000, right? The limit which has bank set uh, for overdraft facility is 2000. Now you only have 500, so bank lends you in a short term. Bank lends you, okay, you pay the bill, you can pay me later, right? So you use the 500 from the bank, right, as overdraft, and you pay, right, and you can uh, of course repay the bank later on with interest, and the interest is charged only on the amount that has been borrowed by the borrower. Okay, now discounting bills of exchange can be explained with simple you know example. Let's say there is a person A who is selling a good worth rupees 10,000, let's say. Okay, consider 10,000 as a big amount. Two, for simplicity's sake, I'm making it 10, sorry, 10,000, but the amounts are huge, right? So it sells goods and services worth 10,000 to B. Now B says that it doesn't have money to pay right now. Then it promises to pay after 3 months. Now the bank comes to the picture, right? Now they come into agreement that B will pay after 3 months. But if A needs money before the maturity, A can go to the bank. A can go to the bank and withdraw the money, of course, right? Before the maturity, bank will not give the full amount. So let's say bank will charge some amount, let's say 9,900 and okay, let's say 9,900 they charge, they give it to A, keeping 100 rupees as the charge. And when bank later on receives from B, it receives full 10,000 only. Okay, so this is how the discounting bills of exchange work. So the third one is the agency function. So there are various agency functions of a bank, like for example transfer of funds. They transfer from one bank account to another, you know, uh, like demand drafts, etc. Collection and payments of various items, like they collect the check, they pay, and bills, interest, dividends, etc. And there is purchase and sale of foreign exchange. Some commercial banks are also authorized by the central bank to deal in the foreign exchange. So these are all the agency functions, acts as an agent, purchase and sale of securities, um, income tax consultancies, trustee and executor. The commercial bank do preserve the will of their customers as trustee and execute them after their death as executors also. Um, so these are the agency functions of commercial banks. Apart from agency functions, there are general utility functions, like banks do provide locker facility, traveler's check. Okay, so it basically makes it's utility oriented. It makes life easier, so that's why it's called general utility functions, right? So commercial bank also undertake the task of underwriting securities, like you know public has full faith in the commercial bank, so because of the credit worthiness of the bank. So buying and selling securities with the commercial banks, the public do not hesitate actually. So it does underwriting securities also. It also collects statistics, which will be used for various study purposes, right? For various research, for trade, and industry, and they advise customers on financial matters as well. So these are the general utility functions. um, so in the next episode we will be covering money creation or credit creation by the commercial bank. I have covered this, actually, this part, long back, but I want to dedicate a full episode on money creation or credit creation by the commercial bank. So in the next episode, we'll be covering that. Till then, um, have good time, study well, and see you soon in the next episode. Till then, this is Shivankar sir signing off. Thank you, and please subscribe to Vision Economics Academy.